Hi, I'm Keith McCullough. Welcome back. I'm here with Jay Van Sciver, who runs our industrials research business, to talk about a stock that he got bearish on in July of 2012 with a note, probably one of the best notes I've ever read at Hedgeye, called CAT and the Mining CapEx Bubble. CAT, as in Caterpillar. So, Jay, welcome to talk about that. Ahead of a catalyst, what's going on next week?
So on March 4th, we have Caterpillar's Analyst Day, and this is a very anticipated Analyst Day because CAT has obviously struggled significantly over the last year and a half. So as we look at this March 4th Analyst Day, there's a large amount of expectation that they will make significant changes to their business, that they will announce new cost cuts, restructuring, items like that.
Now, the stocks actually ran ahead of some expectation that something less than horrible is going to happen at this company. The stock basically went from 110 to 75. I think you were saying was down 30% relative to its sector last year. There's a difference, though, between how a stock performs and how a company could potentially perform prospectively. What would you be asking the management team about on that front?
So I think there are some reasons why it's done very well into the analyst meeting. First, in the 2 months leading into the Analyst Day, Caterpillar has done an accelerated stock buyback of $1.7 billion. I think that probably had something to do with it. Makes that presentation a little easier for management.
But that's not an operating event. That's just like, please stop selling our stock. It's trading at what you think is like 10 times earnings, and we'll give you a bone here. But there's no operating message there, is there?
No, and I think one of the questions you might want to ask management at Analyst Day is your pace of buyback a sustainable pace?
Really?
Can you keep, I mean, obviously you can't buy back $1.7 billion, even if you're a $60 billion industrial company, buying back a couple of $1 billion of stock every couple months is not an easy pace to maintain.
Neither is it a business plan. I mean, $60 billion, by the way, it's only 3 times as big as WhatsApp, so it's not that big anymore. But in all seriousness, this company at this Analyst Day has to deliver the wood. Like, they have to deliver something fundamental, do they not?
They do, and I think it's going to be very difficult for them to do that because at the most basic level, Caterpillar doesn't have a cost problem. They don't have even a strategy problem. They have an end market demand problem.
It's a huge problem.
Exactly. So when you see prices for metals like copper triple, you see a huge increase in capital spending to accommodate that higher metal price. So a whole bunch of mines become economic, people buy equipment to extract the metal, and then when commodity prices stop going up, they don't have to go down, but they just stop going up, capital spending moves back towards depreciation, maintenance, CapEx-like levels, because let's face it, metal demand is not a growth industry. People have been mining metals since 5000 BC in Cyprus for copper. It's called the Iron Age for a reason.
Yeah.
We call it the world's second oldest profession.
It's interesting when you say it that way, because typically when I watch people or hear people talk about this stock, they think it's like this macro stock. Oh, gold's going up, I should buy Caterpillar. Or metals and mining stocks are going up, therefore I should buy Caterpillar. But a lot of that is based, I think, on a confirmation bias of what worked before. What you're saying is that the order cycle and the production cycle that was embedded in the order cycle has to actually replicate itself for you to buy CAT for the same reasons that you did last time.
No, and I think you raise a great point that when you think about the last really big bull market in gold in sort of the 70s, you saw a bull market actually in commodity-related capital spending, resources-related capital spending.
Yep.
And Caterpillar was a great stock to own in the 1970s as forestry and mining equipment, oil and gas and construction boomed. Then as you enter the 1980s and you see, for example, stronger dollar, other aspects that portended a weaker commodity market, Caterpillar had a decade of problems. They restructured through most of the 1980s without a great deal of success. It's a very, very difficult problem to address because in the 1980s you had excess industry capacity, so there was a lot of price competition. Caterpillar lost large amounts of money, and you could even make an argument that they were more proactive in the early 1980s than they've been in this cycle. I think they anticipated it better going back and reading through some of their old reports last time. So I think you're seeing, if anything, a repeat or an echo or a rhyme of the last resources boom. That fade off was very, very painful for CAT shareholders.
So when you go in a room with these shareholders, and it's going to be typically buy-siders that are going to be at this Analyst Day, they're going to need to hear something about end demand, and you don't think that they're going to get what they want to hear.
I think it's very hard to make end demand in an industry that experienced a bubble like that. Commodity.
And you definitively think it's a bubble, the mining capex bubble. You call it that for a reason. That's not to be cute.
No, we called it that. We call it actually the resources-related capital spending. So mining is I think a very clear bubble.
Yep.
I also think that it extends to some of the energy capital spending as well. You're seeing similar trends in increases in energy capital spending. And that's a major end market for Cat's Power Systems business unit. Mm-hmm. And that may be later, but I think you'll also see pressure there. And you've seen comments from some companies like Dresser-Rand that do suggest that we're on the right track in viewing it that way.
That's interesting. I mean, again, a lot of people are buying Caterpillar stock because they think it's the gold. It looks like, literally, the chart looks like gold. But Caterpillar is not gold. And if you didn't know that, Jay Van Sciver is most likely going to remind you that during the Analyst Day. You can follow him on Twitter. He's most likely. Are you going to live tweet this thing?
Probably? I usually live tweet it. I probably won't be able to do it. But if I can, I will from my iPhone. Live
tweeting. So if they let Jay live tweet what they're actually saying about end demand, which probably isn't going to be good, it's not going to be a good catalyst for Caterpillar. So if you have any questions on that, I'm at Keith McCullough. That's my Twitter handle, of course. And if you want to follow Jay, at Hedgeye Industrials is his handle, which you can see right here on the screen.